Before he took office, we always like, oh my God, now it's US-China tariff. Okay, China is in trouble. No, this is US with the rest of the world. Everyone.
Welcome back to Trade Live with IG, and it is a historic time, of course, with Trump's tariffs hitting the market. We are unpacking the measures and, of course, the effect of this on economies. China itself facing 54% tariffs on exports to the US, and we have special guests here with us.
We do indeed. We're delighted to be joined by Dr. Xiaolin Chen, Head of International at KraneShares and manages the firm's business outside of the United States. And she's a fantastic thought leader throughout the investment industry and on China in particular. So thank you very much for joining us today to talk all things China. Just to kick off, obviously we've seen Trump last night go on a very long speech about tariffs, and Ange alluded to 54% tariffs on China. What steps do you think China is going to take to sort of mitigate this now that we've seen Trump's policy sort of come to fruition?
This is a great timing for China to look holistically. Well, they have been very realistic on the challenge they face. That's why over the last many quarters, probably 8-9 quarters, China's policymaker has been very much focusing on policies, measures, accommodative monetary policy, so on and so forth, domestically. So they're trying to rebalance the economy to say, you know what, with the billions of people I have domestically, with a very complete supply chain I have in one single country, China can afford to very much rotate slightly to focus domestic economy and still deliver the GDP target they face. But unavoidably, this tariff introduced last night made them probably the largest number on the charts, 54%. But at the end of the day, who pays tariff? Right? Very simple. I watched this video. It was on social media. You can watch this too. Is the White House spokeswoman Caitlin get asked by one of the journalists in the audience, and he said, "Listen, I used to be importer. Okay, now I'm a journalist. I buy things from other country. Your tariff, I pay for it. Okay, the exporter doesn't whatsoever in any ways by default pay that increased tariff at all. Zero. Okay." They maybe you negotiate with them to say maybe you will subsidize a bit, like now it's 50%. Would you bear a bit? They say no, because not by any standard, by rule, by laws, by anything that the exporter who sell you things would pay your tariff. And he send up me as importer pay the tariff, and guess what? I'll increase my price. Okay, and then the consumer in US will have to pay the increase of the price. So obviously, I'm simplifying a lot of the process in between, but the most immediate reaction is a very much surprise on the downside for US. Period. How long would that last for US? You can see US stocks has a very challenging time right after the announcements. So my immediate reaction was, hopefully these are just tools
to get people to the table.
Exactly. I think at the end of the day, President Trump is very by nature is a businessman. He wants to talk, he needs to negotiate. But I do think you can't overuse this tariff as a tool, okay? Because you do remember in the 1930s, all these tariffs and so on and so forth led to who into recession? US themselves, okay? Now it's not just US and China, because before he took office, we always like, oh my God, now it's US-China tariff, okay? China is in trouble. No, this is US with the rest of the world. Everyone. I didn't validate, but there was a joke on social media. Even some island doesn't have any human living there, 10%. Okay, so this is going to be.
This was the island with penguins.
Yeah, I saw that.
I saw that. It was just penguins there. And then 10% if you export to US. So first, we need to take time. Everyone needs to take time to observe this. If the exporters are refusing to absorb the tariff, which is highly likely to be true, because it's not just they buy something like if the US importer have a bit of a manipulate position to say you don't drop the price, I go and buy somewhere else. It's highly unlikely all those goods are in those category. Means the exporter will refuse to absorb because they will have somewhere else to sell rather than just you. If I can only trade with you, I have to bear those costs. But that's not the case for most of the scenarios. So I think US will have some tough time ahead until this settles. This is a double-edged sword, period, the end. And then what China's reaction? China has reacted already for the first 10% increase, another 10% increase. I think they should just pause there and just reflect. This must be a tool of negotiating with China, because China and US the two leaders supposed to meet in a few months' time. Mm-hmm. You don't do that before we meet, right? There was also some discussion saying that US and China are making a deal or trying to strike a deal behind the scene.
I'm sure that something would have been spoken, this would have been talked about, because China has just had all the CEOs go over to discuss, how they're going to do business in these changing times in China. Yeah. I'm sure they would have come up with plan A, plan B, what happens if the tariffs continue in this manner and they, don't ease off? How are we going to try and trade in this environment? Do you think at some point China might decide to weaken the yuan if there is no easing back of these tariffs?
Easing yuan is not very desirable nowadays than, let's say, a decade ago, because China was exporting a lot of the lower value chain products, which they need a cheaper yuan to make those exports attractive. I think certain degree of weaken the currency would have to be unavoidable in the near term, but long term is not a desirable path for them. Why? China also buys a lot of stuff nowadays. They also upgrade a lot of the exports products in the value chain to a slightly higher, like autos, okay? And then certain, manufacturing machinery, those are exports slightly higher value chain. It doesn't necessarily need a cheaper yuan to help those anymore. So not very desirable, but I don't think it's in their hands to say we don't want to achieve that. Near term, you will have the risk with that. Also, on the other side is, if this is the case that is US determined to do all these tariffs, US economy would unavoidably to face some challenges in the near quarters. That means dollar will get weaker. When dollar get weaker, inflation may pick up, and then Fed may pause the decision. They already decided to pause the decision. Last year, this time, we probably say, it's going to be 3, 4, 5 cuts. No, now the best estimate is 3. I think someone says maybe 2. So the number is dropping. Let's say US Fed doesn't make any move on dollar. Renminbi, clearly Chinese monetary policy been losing for 9 quarters, right? If they continue that path, the interest rates differential would also make yuan a little weaker.
I'm just going to be a little bit of a pessimist here.
Sure.
Worst case scenario, they have a meeting, Trump and Xi Jinping, and they can't come to an agreement. And actually Trump may, who knows, he might increase tariffs further. Do you see China focusing on other trading partners, or just continuing to grow their own sort of self-reliance, would you say?
That's a great question, because I think they have been preparing for the uncertainty for many quarters, even before he potentially take the office.
And this is part of the Belt and Road Initiative.
Correct. They kind of put it on slightly on the pause because, the discussion and because of the pandemic, so on and so forth. They will do both, to answer your question. They have been already doing the first one, which is rotate away from exporting partners. If you look at the last decade, their exporting partnership with Europe, with ASEAN, with frontiers has shoot up. Obviously not to the level can replace USA as number 1 just yet. But the fact is they have already started over the last 5 years particularly to rotate away from US as a trading partner, shows they understand the path to go from there. That's one. And second, even focus on domestically, that's a huge market to do, billions of people, okay? At this juncture, China has the peak of the middle class, which is the consumer power, the main power of Chinese consumer power. That's why you see all the policy announced of trade-in program, cut mortgage rates of $150 billion straight away, and also allowing you to remove the restriction to buy a second housing and then let the housing to have a stabilizing fund. The national team started to buy equities, like Japan did, okay, the pensions did. All of the measures is to say, let's just focus ourselves domestically. At this juncture, they have very much quite a good cards in hand. They are leading in green infrastructure. Their solar panels world number 1. The conversion rate of sunlight to electricity, simple as that, is top in the charts in the whole world. They have their infrastructure who built in 1990s. Remember, just before they joined WTO, they heavily invested about 10 years of infrastructure. So now it's probably 20, 30 years old. They due for an upgrade, which is what they're focused on. Easily, that can create a job market. Last year, they created 12 million new jobs. This year is a similar amount of targets they need to achieve. Easily, they can achieve that as well, if just focusing on some, green infrastructure upgrades, so on and so forth. And then middle class and a lot of this DeepSeek, I'm sure we will touch on AI and so on and so forth. They are heavily recruiting resources, intellectual, like people from abroad come back, and then they're providing the funding. China is not an issue about liquidity. The government is rich in liquidity, means they have not, maximized or used any monetary toolkit they could use. They used one last year. Remember, they issued 1 trillion ultra long dated bond fund.
Yes.
They haven't done that for 15 years. And they've done once and then oversubscribed multiple times. They could do that again this year. So the monetary room for them to continue to support the economy, it's not even started yet. Chinese household.
We thought they'd start trickling through, but they did it just one go, and then they
did one go.
Yes.
They say, let's try the market, and the market is oversubscribed. So okay, pause there. And then what happened also, the Chinese household, they're not spending. Last year they bought 120 billion parcels, 10 billion every month. Okay, that just shows they're still consuming. In China, it's not about liquidity because during pandemic, you probably remember that we talk about those back in time is. Their savings, time deposit, real savings, gone up 80% during pandemic. They have money, just they haven't been really spending. If the government focus on say, you will have a better job, okay, you will be, having more easy access to credit, please borrow, you get a better job, would you feel a bit more comfortable to spend? Yes, you would. So once that spend starts, their consumptions used to be above 40% to their GDP, now has dropped because of pandemic, so on and so forth, that will come back.
Do you think technology is going to be really key to driving the sort of domestic consumption that you've sort of alluded to?
Great question.
No one uses cash anymore. We talked about this. Everyone's using WeChat and they're all digitized.
They achieved that about 9 years ago. So 2016, they're already cashless society. When John and I, who is our CEO at KraneShares, when we go around in US trying to tell people that China A shares get included in index and then the country's cashless society, they're like, what? Why? So everything is done, technologically. Technology is very, very important. China somehow, I'd say, I'm not going to say, wow, voila, everything is beautiful. Hardware, like the chip and the semiconductor, China is behind because they're into the game 30 years later than Europe and US. Okay, so what they're trying to get up to is assembly. Assembly is also crucial because a usable chip requires 700 steps to assemble to become a usable chip. If any one step you make a mistake, done. It's not usable anymore. So China is really highly skilled at assembly, but it's very much the lower value chain of the entire chip semiconductor. So they clamp slightly up is the machinery. The machine they use to assemble. The machine, they're very good at making those machines. So they up slightly. In terms of chip IP, they are nowhere near. They're still, I say, 15 years behind at least. But where China is potentially now leading is the software, is the usage. So when you buy technology, when you buy innovation, when you're considering AI in China, you should consider that part, okay? They have a very good inference, like a chip that can make the logic works and put it into a robot and just do a similar job. They're very good at that. And DeepSeek proved to be, doesn't matter DeepSeek spent 5 million or 50 million. Some say, oh, maybe they spent 20 million. Doesn't matter. The key point is China has a DeepSeek. Raise the restriction, they still have DeepSeek. That's the key. And then there's many more. Last year, November, I went to Shenzhen. So Shenzhen is a city in China, it's like Silicon Valley in US equivalent. We want to see solar panel companies, ultra fast charge, and EV companies. We see them. So they have a lot of sites, not right in the city center, slightly out. So we stay in the hotel. It's just like not a big chain, very famous, just a normal hotel, to get by. There's robots everywhere. I got into a lobby and then the robot welcomes you, okay? I got to a lift and the robot asked me which floor I'm going. Very creepy, okay? But anyway, you feel like, okay, and then tell the robots the floor I'm going and then get me the floor. Wasn't it amazing? in the morning, the robots like tummy pots can open. You order some deliveries, they get the delivery downstairs from the people. They put into the tummy, go up to your floor and deliver to your door. All robots. They don't need human. Only 2 ladies I saw at the reception desk gave me some tea and that's it. That's how innovative China is.
I can see Martin is dying to ask you a question.
So I think, Xiaolin, what we have seen with the likes of DeepSeek, you've got a homegrown LLM being trained at much lower cost.
Yeah.
What I did want to touch on, as we were speaking about earlier, are those tariff expectations. Which sectors inside China, potentially which companies, try and drill down, are not going to be, or going to be the least affected by the American tariffs, and who's going to be the most exposed?
So least exposed is all those China e-commerce companies. I'll give you an example. So we have this flagship fund called KWEB, KBET Fund. It's expressing consumers and innovation all in one fund. So like Alibaba, Tencent, JD, Baidu, all those names are in like a Trip, all those names are in our fund. We did a bit of analysis because it's our flagship. It's a tariff, it's topic everywhere. So we did a bit of analysis. That fund overall, okay, have about 1% exposure to the United States. That's how much those company has exposure. They basically servicing all these billions of customers locally in China. So any of the e-commerce, consumer-driven, focused domestic market, all those big names, you would say, you know what? When these tariffs happen, all these companies, at least in the US, they sell them. That's absolutely wrong because they don't have any exposure whatsoever. You could argue they have some branches or equivalent, like a Tmall, and in the United States, they sell them there. But remember, those platforms are called platform. Means, let's say all, for us are small merchants. We really just park on the platforms. Alibaba doesn't own them. You can just park there and sell products and you face the customers directly. So domestic focus, like particularly those sectors, Chinese government wants them to lead in this growth of China. Remember Xi Jinping meet all these private entrepreneurship CEOs in China? It's very rare that happens, and Xi Jinping did to meet all of them right before the NPC. In my opinion, for whatever it's worth, it's him crying to say, build up your business, expand your business domestically, hire people. Those companies hire 80% of Chinese employment market. 80% is zero. So those companies are less exposed, and obviously the very direct impact is the ones that's basically exporting directly to the United States. But then what is China focusing on growing? EV, green, solar, EV 100% tariff, but they sell zero. 0 times 100 is still zero. So there's no impact to US whatsoever. But some of the made size of entrepreneurs does sell products to United States will get impact for sure.
So essentially what you're saying, just to be clear here, that after the announcement of tariffs, Alibaba shares, fell dramatically. Tencent as well. PDD, I believe, was down some 5%. The morning after Trump commented or unveiled these new tariffs. I watched his speech last night. Lots of us did as well. You were saying this is just a knee-jerk reaction.
I say it's immediately, let's sell everything because US is down, Asia must be down. Do you remember those?
Risk-off move.
Yes, it's overall sentiments like this is fairly unfairly represented or not. If US has a risk-off sentiments, it's very rarely Europe, Asia has a up day, right? It's a broader beta play that we typically in Europe and Asia stands higher beta to US. So US literally broad sell-off whatsoever. But I do think this is really just a sentiment study. So you know what? Let's just sell everything, okay? But I do think some of the companies get unfairly treated in this instance and present a great entry point. You see, so like those names I mentioned, like I've been teased by a few friends of mine to say, you know what? We thought when Trump gets in, because they know I do China, say, well, China will get sell-off, and it proved to be China is the Trump treat. China has been really doing well. If you look at this year, since January at our firm, we experienced nearly 2 billion inflows. 2 billion inflows. So investors are actually recognizing the reasons of Chinese stocks get sold off was because of macro sentiments. Regardless, you have exposure to US or not, let's just sell you first. Like I told you, all those big companies have nearly 1% exposure to US, right? And then why that tariff will impact my business. So it's broader sell-off sentiment, make them very attractive in their valuation. Look at now and historically. And those corporates are doing a few things. One, they focus on growing their own, own company. Their revenues and profits are catching up back even to prior pandemic level. Okay. A lot of companies say, you know what, if you don't believe in my own shares, I do. What I will do is I buy my own shares back. Like,
yes. Xiaolin, much as the inflows came in the back half of last year, now there is this school of thought that, the S&P has been whacked, NASDAQ's been whacked, US tech companies, they're now down to a level where they might look suddenly very attractive because there's a discount now, right? Compared to, for example, China tech. Do you foresee that there is a growing risk that actually the inflows that you saw might flow out back into those discounted US tech shares?
2 or 3 reasons I want. For one reason is US turmoil has not settled yet. This is really just the beginning of the tariff, the negotiation, pause and break again. I think you're going to have more uncertainties from a macro perspective in US than in China. Points like as a macro policies, money, everything. Okay, what's the policy? You focus on economic. China is very clear. Okay, ease money, cut risks, providing cheap credits to corporates. Okay, remove the regulations, provide to be hurdles, and help all these private companies to access everything they can possibly access. And as a government, they give you all the support you have. Whereas versus US is no clear timeline to say, is no one can answer, is this time round of a tariff is the final one? We don't know. Can this be paused? What if the other nations get impacted? Say, well, I'm going to increase your risks, tariff as well. And then the US, so when is this going to be end? We don't know. There's no clear path on this tariff where this will lead to, how long will that lead to? And second, the immediate impact is on US first. Markets just press in certain level of uncertainty at this level. They haven't really repricing. If this tariff really here to stay long term, because we don't know if he stay here long term or not. Trump can say, you know what, pause. Resume, pause. He done that few rounds already, so we don't know if it's really here to stay long term. All these US corporates need to re-rate with their earnings, profits, all these haste. It's only the beginning. I think US, if this continues, US correction is only at the beginning for doing that.
One thing aside from tariffs where just been sort of under the microscope for China has been youth unemployment and a property crisis with, I think Evergrande was the notable one there. What has the Chinese government been doing to sort of alleviate this and I guess sort of gain investor confidence outside of China?
It's very good you put those 2 questions together because the US unemployment is directly linked with the weakened or softened real estate market. So that range of the employment is around 18 or even younger, 16 to 24, 22, 24. Those you either should study at university. If you're not, you clearly at some low-paid job, which is real estate market, easy to enter, no barrier whatsoever. Because of the cleaned up or consolidation in the real estate market, there's no new sites, new build. So all these young people have no job. So those 2 are really linked. There's a few things happening here. I'm a long-term bear for real estate in China. I think it's due and should have a correction. I've been calling that for a long time, and then it just keep on going up. So I was wrong for many, many years.
It's too early.
Yeah, I was too early. I was like, this is unbelievable, because when my parents bought some houses, this is very strange, style of buying a real estate in China is people like to buy it by cash. They don't like to borrow. This is like, so I've borrowed half and then pay half. This is my house or bank's house. So they don't like that. So typically they prefer to buy cash. And then they did that in earlier 2000. Many of them bought it really at cheap level. Use my dad. I always use him as an example. He's sick and tired of me talking about his personal wealth. But he bought it like 50,000 RMB. That's less than 5,000. A very nice house right by the city center. And it's 2 floors. He used second floor for his own business, and first floor he's renting out. That house at some point ran up to market nearly 5 million.
Wow.
I cannot believe it. That's why after that I said, you have a bubble. You got to have a bubble. And then he was like, no, he's very happy. Now mark to market.
I would be happy too.
He was like, no. And then now mark to market, he did lost value. Okay, it's not as much as 5 million. It's probably around the 4. He did mark to market, he lost money. But is he in trouble? Not at all. Not at all. That's a great investment he have ever made in his probably whole life. So this correction over the last 2-3 years, I think is pretty much done the most toughest job. Okay, I now looking at all these policies, mortgage, interest rates, how they trying to stabilize the markets, led me to believe the put is being activated. You will not see this 20, 30, some tier 1, tier 2 city at least lost about 20% of their price, okay, mark to market value. And then some tier 3, tier 4 slightly less developed lost a bit more, but their price is cheaper. So I think the consolidation job is done. It's
hit the bottom.
It's hit the bottom.
Yeah, one of the things that we're actually seeing is that those tier 1 cities, housing inventory is now back to a 15-year average. So there isn't this unsold housing inventory sitting on the books anymore, and the buyers are back. But as you mentioned, it's in tier 1, tier 2 cities. People below that in tier 3 and 4 cities have experienced much worse.
Yes, they did, but their price is also not high. Their investment level also not high. On average, Chinese household about 30% leveraged. So there's that mortgage rates. That's why the 2008 Lehman Brothers situation did not happen in China. Because when granddad happened, those situation, and then everyone said, China's Lehman Brothers time is coming. No, because they're not over leveraged. 2008, many households here and in US are carrying a negative equity, but they are not. There's probably less mark-to-market value. That's one. And also, all these policies in place, it really shows, they kind of like the consolidation is done. And the other thing is you see there's a lot of index tracking the house price in China. About 70 most developed cities in China, the price of primary or secondary both start to show sign of recovery.
And China can work the levers, right? Like we saw end of last year, even when it's we're seeing weakness or cracks, China can order its banks to basically allow people to remortgage.
Yes.
Even though they've not come to the end of their term.
Yes.
On a favorable
terms. Exactly.
On favorable terms. I like what you said about your dad though, because they like buying cash. So when I live here in the UK, my parents, especially my dad, is very upset with me because I'm all about leverage.
You're in the industry for it.
I understand leverage. So
maximize it.
Yes, maximizing the leverage when age is on your side.
Yeah.
And so he does not understand that at all. So why have you not yet paid everything off in like the first 5 years?
Yeah.
And I said, I have not 1, not 2, but I have 4 mortgages. There's a complete cultural, crush there, which is fascinating. Yeah. Just very quickly, I have to be devil's advocate here. Surely that if the US, and I get what you mean, Xiaolin, about them being at the start of this uncertainty, and we still haven't seen the end of the market crash.
Yeah.
But if they catch a cold, the rest of the world's economic growth also goes down, just like China. If China catches a cold, everyone else gets dragged down. Are we not at a point where if the US continues, and I know I get your point when you say they'll hurt first more as a result of the tariffs, but we could be at a point where it just topples every other nation into a recession.
I got it. It's on the dangerous path if you continue this way. I think obviously like you get hurt first and then the rest also get hurt, like the European Union also making an announcement we're going to retaliate and so on and so forth. It's never good to continue this path because you remember in the 1930s when US get to a great recession, not the rest of the world is great either, right? But then you need to find certain investments that have a bit more self-resilience. And also now is the time to look for who give you the most leverage on the top. And I think most important is which part of the world can have more of leverage and power. You mentioned leverage and power to say, you know what, if we face great challenges, who has the most way to contend and can continue to grow from here. In those instances, I would think is China, because they are very self-focused and self-oriented in terms of making policy as one, and they have the consumer markets they needed to. Any markets that any country has, those 800 plus million of middle class is only in China. They only exist in China. And also China has been prepared for all these uncertainties for a long period of time to say, you know what, domestically, we just need to focus on ourselves more than focusing on the rest of the world. But I do say if US doesn't do well, the rest of the world will have a challenge time. I certainly hope, because a lot of the statements you read, I think everyone is trying to get a sense of the statements made by President Trump is, the language does sound, there's a lot of room for negotiation. It does sound that way. So a lot of people staying a bit of positive view to say, you know what, hopefully this is just a tool he's using to get you onto the table and negotiate with me. But tariffs is...
Besson did say that retaliatory moves would lead to escalation. So you know, there's also, I think Trump wants to keep the rhetoric or keep the I'm the tough guy going, right?
Yeah. He also wants to let them know that he's retaliating.
Yeah. and the irony of this all, we're talking about it on the Trade Live with IG show, is that, you know, these companies that initially outsourced and went abroad to have their plants and manufacturing out there actually did it for a cost saving because it was economically viable, right? It made sense from a cost point of view.
And just sort of on a concluding note, because we're almost at the end of our discussion today, you mentioned KWEB, it's a sort of China tech ETF, which you can buy on the IG platform.
Yeah.
What other products does KraneShares offer in the UK for some of our clients? Because obviously we know that KraneShares are a leader in Chinese investing.
Thank you. So, you know, KWEB is obviously the flagship, is place the Chinese domestic consumer. So to simply put that fund is, if a Chinese person today, they probably don't even read the tariff, but they start to spend $100 in their daily trading, you get a benefit from that transaction happening. So that's literally the entire ecosystem of how they become very technologically advanced in their spending and daily life. That fund benefits from that. Also, a lot of the companies in that fund are in this AI application usage. Even they develop robots to go to, remember China is aging, okay? They develop all these robots to go to, you know, care home to talk to the elderlies and be a companions, bring a water bottle, you know, bottled water for those people. So all those technology developments are also captured in this fund. And then we also think because of the valuation, because of the checklist of macro factors, all the policies, and fundamentally the valuation and so on and so forth, that is doing well, that broader China play of a beta also makes sense to say, you know what, these companies typically focus domestically, okay? They're very self-oriented in terms of making policies. We have another fund called Chen, it's CHIN. That's S&P US, 500 US. This is S&P 500 China, okay? Right. So the top 500 Chinese companies in China. And all these funds are available in sterling, dollar, and euro currency, whatever the currencies that your platform. I'm sure you spot all of them for them to trade. The other fund I thought is very interesting to talk is China's own NASDAQ. Obviously, US NASDAQ had some tough time last night, so it may not be a great time to talk about NASDAQ, but this one is interesting, is it has all these Chinese unicorns, okay? They used to be private and they don't want to come to public. And Xi Jinping will say, why don't we have our own NASDAQ? This is about 5 years ago. They say, okay, we should have our own NASDAQ board in China. So all these private unicorns are encouraged to say, right, I'm going to list publicly, okay? And in return, the government gave them a favor policy to say, if your R&D, research and development, is 9.8, whatever the number is around that level, say, of your overall expenses, come and claim them. The government will pay for it. They say, oh, that's a favorable term, so on and so forth. So there's a very great taste into the STAR. They call them a STAR board, Science and Technology Innovation. So we have this fund called KSTR. Is a very unique entry. This one also have we have an exclusive index relationship with the Chinese index provider on that. So that's the only fund available with KraneShares and also on your platform. Yeah. And this one is why I mention this is China today is the most unicorns that is not IPO'd.
Tell us a bit about these constituents in the K-Star, because like there's Haigon, the only one, there's Montage, I think the only one that I actually recognize is the Cambrion Tech, is that right? It builds chips.
Yes.
So tell us a bit more about K-Star.
So this one was really very much of the, you can think of all the sectors are in the science, like the name indicating, and technology innovation. So they also have a lot of companies, for I give you one example, in Africa, they say, I want a phone, okay? A phone that is, lasts for days, no charging needed, because it's so hot, okay? I also want it to be very durable, okay? Like it's 40 plus degrees, it shouldn't be burned or, anything like that. And I don't need a lot, just as long as the color and it's very resilient, it's very tough phone, I can use them. And I only want to pay you $30. No phone maker would be interested. Sorry, no, adios. And this this Chinese company say, you know what? We make one for you, okay? And we charge you $30, okay, for it. And this is a company that's in Star. They literally dominate entire Africa's phone markets. It's, it's too small, yes, but they sell hundreds of millions every year. They have a new model. $30, they will buy a new one every time they come up with new models. So a lot of names are like that. And then China today have nearly, the exact number of about 3-4 months old is 168 unicorns. Okay, unicorns typically when you reach the 1 billion, actually you know that, you reach the 1 billion, you got to go IPO, okay? Or in certain years. China has all these 168, all exceeded 1 billion, far exceeded that with 5 years already. They haven't do all these IPO yet. This is where I think market not even reporting it is when China have all these policies in place, the public company doing well on corporates, national team are buying all these stocks, and then they resume the IPO market. All these unicorns come to the market, will be huge amount of investors will be interested in these stocks. And guess where they will go? Star. Star will be their very preferred board to go because they are all in the innovation, technology-driven company. So the K-Star would be a very interesting, if you're interested in Chinese unicorns, new IPOs come to the market, some names that you don't often hear on main streets that is doing unique business in somewhere in the world.
So Xiaolin, one of the interests of our clients is EVs. I think BYD, one of the main players in that space coming out of China. Do you have any ETFs that focus on EVs?
We do, certainly do. We have one ETF called KRS, CARS. It's literally expressing the global initiative of future mobilities. So we have 35% in China, the rest of 65% is the rest of the world. It has a name like BYD, NIO, all those companies in that fund. It's obviously expressing the entire ecosystem of future mobilities, starting with batteries, material you need to assembly to become a car, to make an EV car, and the EV car maker themselves, and also the service provider use the EV cars. So it's a very complete ecosystem play of future mobility and electrical vehicles.
All right, great. So I think then the four that we've discussed today, we've got cars, which covers EV as a global play. We've got e-commerce under the K-Web ETF. We've got the Chinese NASDAQ for K-Star, and then the broader Chinese market under the Chen Index.
Exactly. So if you really want to play a consumer play, consumer recovery, which is 30-40% of China's GDPs, and also a bit of innovation, technology innovation, that's KWEB, KWEB. And if you want to start to facing in to have 8 exposure in China, slightly broader beta explain, that's S&P 500 China, that's the Chen, CHIN. And obviously the Star is a very interesting with Chinese unicorns, China's own NASDAQ play, that's the K-Star fund. And cars, like you rightly point, so China is leading in the electrical vehicle space, and their company, like BYD, is here, so cars is really playing the future mobility of the global initiative.
Brilliant. That is all we have time for today, but thank you so much, Dr. Xiaolin Chen, for joining us today. And we hope you found this China investing special interesting. Thank you. See you again soon.